So there's some very eclectic art funds out there and some very interesting ones, and I am very happy today to turn the time over shortly to Michael Sellinger, who's going to be our moderator today. Michael is the founder of Cottelston Advisors, which is a lifestyle, branding, and management consulting firm specializing in the visual arts. And Michael is also on the board of the Art Fund Association of America. And I'm just going to go ahead and turn the time over to him, and he will introduce our panelists, and we'll get started. Thank you, Michael.
Thank you, Marcia. Thank you, everybody, for coming. On behalf of the Art Fund Association, I want to extend our thanks to Association for Corporate Growth for putting together the panel, and to Marcia Nelson for her support of the Passion Fund industry. Before we start, just a little bit about the Art Fund Association, if you will. It was founded in 2009. Since that time, it's been a proponent of art and passion funds, specifically the idea that properly structured and managed funds can produce attractive returns for investors. The association's mandate is to educate, promote, and guide the art and passion fund industry to the general public. Now just a few housekeeping matters. Please silence your phones, but don't turn them off. We would like you to tweet the event. If you do so, please use the hashtag #PassionFunds so we can track the conversation. Finally, I need to read the following disclaimer. My attorney tells me.
Everything you say can and will be held against you.
Exactly. Any disclosure of the attributes or investment terms of the various funds managed by the panelists today are for discussion purposes only and are mentioned solely to educate the audience as to differences in governance and fund structures across the passion fund industry. They're not meant to be an offer to sell or subscribe for securities of any of the various passion funds mentioned today. Okay, so with that said, I'd like to start with a brief overview of the passion fund industry, and then we'll pass it on to the panelists. So what are passion funds? I, as mentioned, come from the art world, and so I went online and looked for a definition of passion funds, and as you can see, short of what's in bold, it reads like a private equity model. This is important because, as you'll hear from our panelists, most passion funds are modeled after private equity. And that's important because that means that while this is a nascent industry, there is a history of structure in place that guides it. So let's focus on what now makes passion funds unique, specifically rarity. Rarity is a component of basic economic equation, demand and supply and demand. But without demand, rarity is irrelevant. So let's talk about demand, or why do we collect? In the art space, we talk about things like intellectual stimulus, social position as drivers of the market. But these don't necessarily explain why most of us start collecting when we're young. What is that innate instinct that causes us to want to possess things? According to Carl Jung, it is a remnant of our hunter and gather instinct, which sounds a lot better than what Freud says. However, regardless, the demand, the cause is there, the effect is the demand, and it is said that 1 in 3 Americans actually collect. So what do they collect? Well, here is a list of various areas that passion funds are being built around. They're all unique, they all have their own nuances. But there's certain commonalities or common characteristics of all these types, of all these assets. We've already talked about passion funds buying objects that are rare. Preciousness drives desirability. Less is clearly more. Quality is another important component of passion funds. These assets have histories of connoisseurship, vetting, and grading. There are evaluation systems in place that have been tried and tested. Finally, and probably perhaps most importantly, they all have public liquidity events, auctions, where if you buy something right, you can sell it. We're talking about major auction houses with experts on board, not eBay. So why passion funds? Well, as I hope that I've shown, it's a robust market. As our panelists will show you and talk to, they're great inflation hedges, and the assets tend to be uncorrelated to traditional asset classes. Finally, there's a value arbitrage. This is not a random walk. These are not transparent markets. Success comes because someone has an expertise, access and knowledge. Therefore, experts have big advantages, experts like our panels. What this all means is that there is a history of long-term attractive returns in the passion fund industry. So what I hope is that I trust that you now understand why passion funds are an important component of a holistic approach to wealth management strategy. The only question that should be on your minds is, what is your passion? With that, I'd like to turn it over to the panelists. We're going to start in order, and afterwards we'll follow by a discussion and Q&A. Thank you.